Welcome to Lesson 18, Chart Basics Lesson 4. Today we learn trend and range, how to read where price is flowing right now. What we'll cover: 1. What a trend really is, the path of highs and lows. 2. How to tell uptrend, downtrend, and sideways apart. 3. How to respond in each case. Price doesn't move in a straight line. It rises and falls like a wave. Trend analysis is simply reading whether that wave is climbing or falling, the same skill traders use when they glance at the S&P 500 or NAP. Follow along on the Bitcoin daily chart on your screen and watch the recent moves with me. Price always bobs up and down, but it still has a bigger direction. You read that direction from the pattern of highs and lows. A high is a peak above its neighbors. A low is a trough below them. Think of a hiking trail. Are the peaks and valleys climbing higher or drifting lower? Watch how a sequence of highs and lows is moving and the market's big direction comes into view. That's the core of trend analysis. You don't need indicators. Highs and lows alone are enough to read direction. That's a textbook-proven fact. On the Bitcoin daily chart on your screen, find the last few highs and lows yourself and check whether they're rising or falling. An uptrend is when both highs and lows keep rising. In English, it's called higher highs, higher lows. Each wave crest tops the last one, and each pullback still holds above the prior trough, like climbing a staircase. In an uptrend, buying near the lows is statistically the friendlier approach because you're not fighting the bigger flow. The same idea when the S&P 500 or NASDAQ is in a clear climb. The stronger the uptrend, the faster those lows step higher. Demand, buyers, keeps beating supply. As the trend weakens, lows stop recovering as quickly and start holding roughly the same area. That's a pattern you can confirm in real data. On the Bitcoin daily chart, scan the recent lows from left to right and track whether they're stepping higher. A downtrend is when both highs and lows keep falling. That's lower highs, lower lows. Rallies fail before they clear the prior high, then price drops deeper than the prior low, like walking down a staircase. If you buy too early just because you see a bounce in a downtrend, the bigger flow is still falling, so losses come easily. Buying the dip can work on a bounce, but that means fighting the bigger current, which is why it's risky. The signal that a downtrend is changing is clear. Lows stop making new lows, and at the same time highs start breaking above the prior high. Until that turn signal is confirmed, approach downtrends carefully. That's a lesson from decades of chart history, whether you're watching Bitcoin, the S&P 500, or the NASDAQ. A sideways market, a range, or box, is when highs and lows keep oscillating around similar levels. Direction hasn't been decided yet. The upper boundary is resistance, the ceiling. Price climbs to it and then tends to get pushed back down. The lower boundary is support, the floor. Price refuses to break below it and bounces back up. Think of a cup of coffee that keeps bouncing between about $3 and $4.50. Price just goes back and forth between those two lines. Inside a range, buying near support and selling near resistance, classic range trading, is statistically useful. But a surprise headline or a sharp Fed-driven swing can smash the box in a heartbeat. That's why you always plan your stop-loss first. When the box ends, price breaks out above or below. The breakout direction becomes the next trend's direction. Volume is the key. A breakout on heavy volume is usually a real trend turn. Light volume can mean a fake move. This is Lesson 17's volume idea put to work in practice. There's a famous investing saying, trend is your friend. Riding the bigger flow is much easier than fighting it. Common mistakes: shorting, borrowing to sell, in an uptrend, or buying in a downtrend. Both are bets against the flow. Of course, every trend ends eventually. But until it does, history shows most trends tend to keep going. Trusting the current trend until a clear turn signal appears is statistically the better odds. That's what decades of market research point to, from crypto charts to the S&P 500. It sounds like a simple rule, but sticking to it alone has saved people from a lot of big losses in real life. Lesson 18, Chart Basics Lesson 4, Wrap Up. 1. You read trend from the path of highs and lows. Both rising equals uptrend. Both falling equals downtrend. 2. Sideways, a range/box direction undecided. Selling near the top and buying near the bottom. Range trading with support and resistance is statistically useful. 3. Trend is your friend. Don't fight the bigger flow. Approach in the same direction. That's core loss prevention. Next, Lesson 19 covers support and resistance, the levels where price keeps pausing and turning. It's one of the most important ideas in chart analysis. This lesson is for education only. It is not investment advice. You are responsible for every trade you make. Please subscribe, like, and leave a comment.